Welcome back to another episode of Policy and Profits. I'm EJ Antoni, your favorite TV economist. Well, I play one on TV at least. And I'm joined by the one, the only, the greatest trader in the world, Anthony Esposito of Island Capital Investments. Anthony, how are you doing today?
High praise. I love it. Winning at life. I love the intro always. I'm doing well. How are you?
I am hanging in. It's been yet another crazy week. I know we always say that it's been a crazy week, but it really has. These are crazy times. But I got to say this last week, especially just the last day or two, it's been yet another case of. It feels like the rest of the world catching up. Where were these folks 6 months ago? Where were they a year ago? And all of a sudden, the mainstream media, the Wall Street Journal, whatever the case. You're seeing these articles, you're seeing these news stories. And again, you look around and you say, where have you people been?
It is the same game of chase and blame. Oh, that actually rhymed. That was good. It's the same game of chase and blame Donald Trump. And it's whether it is an analyst at Wedbush trashing Tesla because of the earnings and needing Musk to step away from Doge. Is a man who runs multiple companies and will continue to do so. He's not a monogamist in any aspect of his life, or trashing tariffs or chasing inflation or the price of eggs, or it's the same game. They're constantly playing checkers as this man's playing 4D chess. And the funny thing is they can't see how far behind and how juvenile they are in every bit of their approach and how politicized everything they do is, whether it's a rating and a price target on Tesla, or whether it's inflation expectations, or whether it's the results of the tariffs, whatever the case may be, it is an absolute joke. And honestly, I think a lot of President Trump's skill and strategy is baiting all of these ridiculous conversations and spiraling into rabbit holes, which at the end of the day are completely insignificant and will not have any impact on the result of his policy or where he wants us to be. Powell has been one of the biggest conversations lately. We have the press questioning Trump. Obviously, he's been out and very negative on Powell with good reason. And I'd like you to get into that for a second, because this goes back to the first Trump term. But let's go to the clip of Trump answering questions as to whether or not Powell is getting fired or not.
Attention to firing Jerome Powell, because here, economic advisor Kevin Hassett a few days ago said that you and people in the White House were studying this idea of possibly before his term ends. No. Do you have any plans on doing that?
None whatsoever. Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. It could have taken place earlier. But no, I have no intention to fire him.
So first of all, Trump never said he was firing Powell. What Trump said is, I don't like him. I don't like the job he's doing. And if I tell him to leave, he's going to leave. Am I wrong there? Did he ever say I'm firing Powell next week?
Anthony, it's exactly what he said, basically verbatim. And of course, you're right. Everyone ran away with that. Going back to what you said earlier with the constant politicization of everything, where the facts don't matter. It's always blame Trump. That's the game, right? So, I mean, look, at the end of the day, the president, I think we've discussed this before, he has cause to fire Powell for not just complete mismanagement of the Fed, but also for breaking the law in terms of financing the CFPB, the Consumer Finance Protection Bureau. That's not really an issue anymore, because now Russ Vought and Scott Bessent have told the Fed we don't need any more money for the institution because we're essentially shutting it down, more or less. We're stopping operations. But whatever the case, look, Powell at the end of the day has been a total disaster, and markets rallied on this news that Trump was no longer considering firing Powell, supposedly. And I think the reason for that has less to do with the fact that markets like Powell and more to do with the fact just that it's less uncertainty, right? We have had so much uncertainty upon uncertainty for several weeks now, where especially surrounding tariffs. Look, you have not only different members of the administration contradicting each other, but sometimes you have single members of the administration contradicting themselves in a single interview. So, I mean, that's just been absolute chaos. The tariffs, you can love it or hate it, but I think it's fair to say the plan was not rolled out well. Again, that's not to say the strategy is bad, just that the rollout was really botched. All right. But getting back to Powell and the Fed, even though Powell has proven to be very bad at his job, at least he's a known quantity, right? He's bad, but that's a known, as opposed to the unknown, which is who does he get replaced with? And whoever he gets replaced with, is he or she going to be a good Fed chair or a bad Fed chair? We don't know. Are they going to lean to the side of easy money or to hard money, right? Again, we don't know. So just removing that element of uncertainty, I think, was enough to give that market rally on the news that Trump was no longer considering firing Powell, which, again, as you pointed out, wasn't the consideration to begin with.
No, I mean, and look,
he says he won't leave even if you ask him to.
Oh, he'll leave. If I ask him to, he'll be out of there. But I don't think he's doing the job. He's too late, always too late, a little slow, and I'm not happy with him. I let him know it, and if I want him out, he'll be out of there real fast. Believe me.
I mean, so that was so. Here's the thing. The headlines. First of all, I want to go into Powell and the CFPB, the Consumer Protection Board, and the payments being made. But first, I want to say is the headlines and the headline risk in the market are massive right now, up and down. So the market doesn't necessarily like Jerome Powell. The market likes the fact that Jerome Powell has been the shiny ball and he has continued the Fed put on the market. Let's be really clear. Right now, fundamental market participants, analysts, and traders and investors have no idea what to do because the whole structure and the whole discounting process is completely upside down, and it should be. So they understand that they need to grasp at, and they are grasping at, some old stories. And Powell and the Fed overnight rate and those cuts, that's one of the stories they can grasp to that creates this upward push or bias in the market. Whether or not it should, and I would argue it should not, it's an old story, and you grasp at old straws. I mean, they're literally trying to figure out what story and what narrative could stop the bleeding and get the market to go higher. What they don't understand is these short-term headline bear market rallies are just that. And I continue to write and say and practice. I am not a chaser of any of these rallies. I mean, the whole conversation about Powell, and I'm looking over at my E-mini chart, from the low on the 21st down at 51.27 to where we are right now was a 5% move. That was closer to 7% this morning. So you got a 7% trough to peak move on the fact that A, President Trump said, I never said I was going to fire him, which he didn't. And B, Bessent said, we're going to try and work better with China on the trade deal. Who doesn't think that's going to happen? Like, nothing here is new, but they're making the headlines the most important thing of the day. They're making the headlines market pushers because there's nothing else to go on. So we're in a vacuum of insight, in my opinion. Fundamental analysts are blown up. Funds are losing money. This is a bear market. There is a vacuum here of insight and of thought, and we're trying to grasp straws. And Powell is just a known. So good, bad, or indifferent, they don't want him moved. Okay, I'll buy that headline to some degree. I'll buy the Bessent comments to some degree. There's some thought out there that Bessent is about to spoke this morning and did not get into it, but at a closed door meeting yesterday, which I think was called by JP Morgan. Is there something broken in the system structurally, and is the Treasury about to step in and create a safety net? I don't know. That's a consideration out there now as well. I continue to feel that the levels we're at now on this rally, 5,400 to 5,500 on the S&P cash, are solid resistance, and they're acting that way now. I want to go back to Powell because this has been, I mean, he's a complete joke back to, I can't say it any other way, back to 2018 in the first term. And you had brought up some really great points as far as raising rates into an economic expansion in Trump's first term, which made no sense. And then the contributions to the regional banking crisis that we saw in 2022, which made no sense. overbuying assets in 2020, and now you're talking about him actually breaking the law. I want to dig into that. What is he doing wrong? What is actually illegal in the Fed's funding of the CFPB?
So, Anthony, I think you're 100% right. Powell's entire history at the Fed has just been littered with failure. Let's take the point on CFPB first, though. Essentially, they don't get their funding through the normal congressional appropriation process. Instead, by their charter, they take their money, their operational expenses out of profits from the Fed. So they ask the Fed to send the money out of Fed profits, and then the Fed does so. Normally, Fed profits just go entirely to the Treasury Department. But since the CFPB was created by Pocahontas and her cronies, that's how it's been funded, through the profits at the Fed. Here's the problem. The Fed hasn't had any profits since about September of 2022. So any money that they sent to the CFPB after that point was money that the Fed created out of nothing. Now, the Fed does have the ability and the right through its charter, the Federal Reserve Act, to create money out of nothing, but only when it's doing things such as buying treasury bonds or buying mortgage-backed securities, whatever the case may be. It does not have the authority to create the money specifically to then go send it to the CFPB. That's a violation of the statute. And so since Powell did that, he broke the law. That is cause to remove him, right? He broke the law in the line of duty, so to speak. Again, that's cause to remove him. But if we look at all of his other failures, I think it's really clear what a terrible Fed chair he has been throughout the years. You mentioned going back to the first Trump term. He was tightening when there was no justification for doing so. We did not have inflation ticking up, and instead he kept raising rates and he kept selling off the balance sheet, and he over-tightened so much that it actually broke the repo market, the repurchase agreement marketplace. And they had to conduct a bailout of about $500 billion for leveraged hedge funds in the fall of that year. Then you fast forward just a couple of months to February and even like the first week of March 2020, and we forget what happened because of COVID, but you had the basis trade completely imploding, much like it is today, actually. And so the Fed once again had to start ramping up its purchase of securities. It had to start growing its balance sheet. Now that gets forgotten and it gets completely kind of washed out if you look at a chart, because right after a few weeks of that, the chart just spikes in an almost vertical line because of COVID, and the Fed just starts buying anything and everything it possibly can. But if you zoom in over and over again on that graph and you look at on a weekly basis, again, you see the ramp up in purchases actually starts before the economy shuts down. So it's clear that Powell made mistake after mistake in Trump's first term. In Biden's term, they kept buying securities when there was no reason to do so. They kept exploding the balance sheet. They ran it up to almost $9 trillion. They overpurchased so much that they then had to sterilize about $2.5 trillion of money through reverse repos. And while inflation was clearly getting out of hand, they called it transitory. Then they said it was actually good for the economy, right? They came up with all these nonsense words and nonsense descriptions for it. Powell gave us 40-year high inflation. He gave us the fastest hikes in interest rates in 40 years. And he did that after promising markets he wasn't going to hike rates. And what was the result of all that? It was the banking crisis that you mentioned. So that by the time we get to the spring of 2023, you have all these regional banks that start going under. You had Silicon Valley Bank, one of the biggest bank failures in American history. That happened on Powell's watch as well. And again, it happened because they said they weren't going to hike rates. They exploded their balance sheet, and then they turned around and sure enough, they hiked rates. Yeah. The last thing he did was a blatant move of election interference in my mind, cutting interest rates right before the election in November. And now, even though, again, you look at all the empirical evidence, you have more justification today to cut rates than you did last year, except now they're not cutting rates. So the Fed talks about how, we're data dependent, we're politically independent. I think the only data they're looking at is whether the president is a Republican or a Democrat, because what else seems to matter for them?
That, and beyond that, what has really frustrated me with him, and that's an excellent, phenomenal breakdown, which no one's going to discuss about Powell and the Fed and the missteps and actually the illegality of what he's doing. He sat and watched the Treasury throw us further and further into debt, and then said in public comment, I don't comment on fiscal policy, but that was really the source of the inflation. For him not to know that, I think would be almost impossible to believe that he didn't know that, but wouldn't comment on it. Now you turn the page to the Trump administration, all of a sudden he knows where inflation's coming from. It's coming from Trump and tariffs and Trump's policies. Well, that's garbage. That doesn't hold any water. It's not the truth of what's going on. It's not factual. You can't prove that. You can't even have a real conversation other than a soundbite. So Yellen walks out waving after having overseen $16 trillion in debt creation, say, you guys might have a debt problem. Thanks. Thank you. Go back to your bridge. And now all of a sudden, Powell knows where inflation's coming from. It is a series of missteps. It's a series of politicization. It's a series of sound bites that are anti-Trump, anti-conservative, anti-American, in my opinion. And it's not, it is not his role, and he's not in the role he should be in. Certainly not. The 50 basis point cut in September, followed by 225s, was clearly not data dependent, and it was clearly a political cut. And now President Trump understands who Powell is, what Powell's goal is, and in the interest of the American people is very vocal about it. I don't think the Fed's independence is in question here because of President Trump. I think the Fed's independence is in question here because of Powell. And that's you laid out the case as to why he's incompetent and why he is not independent, why he is politicized, and his goal in his decision making is not based on what his role is. I also hated hearing him come out when he has his mandate of price stability and employment. That's it. That's a hard stop. And we would hear him and Yellen come out and start talking about the environment, global warming. I understand this is hard for everybody. I understand, and we're trying to move towards a world of equity. And listen, I'm not going to have that conversation here about what equity even means or what, how much CO2 is in the atmosphere. It's just not the place for it, but it's certainly not the place for Powell to be having that conversation either. They lost, and we said this months ago, their eye was not on the ball, and they completely mismanaged fiscal and monetary policy. Hard stop.
Bingo.
I mean, great stuff and great analysis. The market is a beast. That's becoming my mantra. Just to give you some idea of how volatile this is, and we talked about bear markets before this bear market started because we honestly had called it December and January, and I continue to remind people of that. Bear markets are a process. It's not a straight line down, although a couple of weeks ago it felt like it was going to be a straight line down. It's not. So just to give a very high level overview, we've now seen a 20%, 21% peak to trough drawdown in the S&P. Okay. Within that, we've seen a 10% move down, a 5% move up, a 17% move down, a 15% move up, a 10% down, and 8% move up. That's been the price action within the last 3 months. Mm-hmm. That's volatile. That's price volatility right there. And that's what we should expect to see. Talking about it this morning on another show, and the question is, what do you think is going to happen? What do you think what will be is what is. We're in a bear market. There's going to be bear market rallies. I've continued to say I'm a seller of those rallies, not a chaser. That doesn't mean I'm selling into them as soon as they start. It means I'm sitting back and I'm waiting for the momentum and the trend to fade on shorter term signals and be a seller of those rallies. I'm not chasing them. Any rally we've seen so far from any levels down to 4,100 recently, a few days ago on the S&P, those levels are not, 5,100. Those levels are not going to be the bottom of this bear. There is more to go. There's more to come. Expect volatility. Expect the headline risk both up and down. And be aware, and this is real important. I'm going to end it on this because it's kind of like, be aware that the economic data, earnings, tariff analysis, tax analysis, inflation analysis projections are so politicized at this point. There is really, there's a collision here of people taking their political views and trying to disguise them as quantitative and qualitative research analysis and fact, and it's not. So just be aware that a lot of the volatility that we would normally see, I believe, is going to be exacerbated here because the headlines, the media, the pundits, this Wall Street analysts, I'm watching everyone do it. They just did it with Tesla last night. There's a lot of politicization here. It's very hard to see kind of work through the weeds and work through what's going on. The bottom line is expect volatility and expect lower lows. S&P, if my model changes on the intermediate long term, I'll change my view. S&P, until we see 4,200, 3,700, we have not hit our lows. And I'm not even saying that those will be the ultimate lows, but those targets, in my opinion, will be hit. So be aware of the vol, be aware of the BS, and be aware of the lower price targets that are currently in place based on the work I do.
And Anthony, I really want to emphasize the importance of something you just said, relying on the empirical evidence, relying on your model, as opposed to, letting the politics make your financial decisions for you. I mean, I was literally just on TV a couple of days ago with somebody who actually thought that the Fed was going to cut on all but one meeting in terms of what's left for the rest of this year. He said how many rate cuts he thought we were going to get this year. And I thought to myself, wait a second, we haven't had any rate cuts yet. And there's only the number of cuts plus one is the number of meetings remaining. So you think they're just basically going to go on an absolute cutting spree and we're going to be down to almost zero by the end of the year? Maybe zero if they do any more than quarter point cuts. I mean, it was just absolute nonsense. But this is the kind of thinking these are the kinds of mental traps, I guess you could say, that you fall into if you let your politics dictate what you think the market is going to do. If you don't rely on the actual evidence, if you're not relying on something like the kind of momentum trend model that you use, right? The model, correct me if I'm wrong, but the model doesn't care if there's a Republican or a Democrat in the White House, right? It is just looking at the numbers. It is looking at market behaviors. And going back to another great line you had earlier, that the headlines are interchangeable, right? It doesn't matter what good or bad news we get. It's just going to be, that's the headline. That's the excuse for the market to move in the direction that it was already poised to move. Again, based on the numbers, based on how things were overbought or oversold. So, just for the sake of the listeners, I mean, you really got to protect yourself, I think, by not letting your politics dictate what you do with your money. And that's coming from somebody who works in policy, right? Who has to deal with politics all day long. Mm-hmm. But when it comes to my money, I am purely apolitical because money is apolitical.
Yeah, and I think that's why I love, the work that I do, and that's why I am a technician, because again, I could care less who's in office. I don't really, Tesla reported last night. I obviously care. I looked at it. I watched what everyone was saying. I watched how the futures were reacting. I watched how the stock was reacting. It gives you an idea of risk appetite and so on. But, at the end of the day, my numbers are my numbers. My model's my model. I've been trading it for 20 years. I don't need to be bothered listening to, most of the time when I'm listening, I'm just listening for more anecdotal information and curiosity. But to be able to quantify what I do and when I do it and how I do it, and what size I do it in is invaluable to me and to the fund, and it puts us in a different position, which is where we want to be. I don't want to be with the pack ever. I want to be moving in the direction I see as the right direction, and hopefully the market agrees, because really at the end of the day, that's all that matters. Up or down, I don't care. Just want to be making money and want to be right and along with the market, not the herd. And the herd right now is completely confused. And that's why, full circle back to the Fed cut conversation, whoever that gentleman or Mrs. was that said that, they're grasping at straws. They're reverting back to a conversation that's a year old, that's 2 years old, that's 5 years old, that's 10 years old, as far as rate cuts mean higher stock prices. Rate cuts mean higher stock prices. So you can bound your head into the table and continue to say that to yourselves and continue to spread that narrative. But at the end of the day, it's a stale narrative. It doesn't work. And you're only saying that because you have nothing else to say, which is sad.
Yeah, exactly. I think that's 100% right. And it is truly amazing how the same folks right now who are predicting a slew of rate cuts did the exact same thing this time a year ago.
Yes.
And how many times did we over and over again say,
Amen.
guys, there's no way they can cut rates. I think sometime earlier in the year, I think you had said like maybe you'll see 2 or 3, which is exactly what we got.
Yeah.
But yeah, you can't get all these rate cuts when inflation is still elevated, and for several months it was actually rising, not even falling.
Yeah.
So again, that was back when you had the Democrat in the office, when the Fed, which is over 90% Democrat, wanted to get those rate cuts in. They certainly don't want to get them in today. And again, I just don't see how on earth you can justify that many rate cuts. You're going to put us down near 0% interest rates again at that point, which is not what we need. That would not be helpful.
No, it makes no sense. Look, we're in a really tough spot. The system is fragile, and we need the best of the best in the right seats and managing us through this. And at the end of the day, Powell's not the guy. That's that.
No, I mean, fortunately, his counterpart in the Treasury, I think, is you got Scott Bessent in there, who, something you had mentioned earlier, and he literally just said this either today or a day ago to the IMF. He talked about mission creep at that organization, where, like you were saying, the Fed was more concerned with like equity and all these other garbage, nonsensical left wing Marxist terms, right?
Yeah.
And Bessent was, hey, speaking truth to power to these folks. He's like, look, you guys are more concerned with climate change than you are about making sure loans are actually good, and that we're not giving money to people who are a severe default risk or sovereigns that are a severe default risk. And he talked about how we need to get back to the basics. The IMF needs to go back to being the IMF.
Yeah.
Now, I don't think we should have an IMF, but that's another discussion. Whatever the case, the fact remains that if you're going to have an IMF, it shouldn't be concerned with people's carbon footprint. It should be concerned with, I'm going to give you money. Can you pay it back?
Yeah.
Period. And I don't care if it's a man or a woman paying me back. That's irrelevant. I just want the money back.
Yeah. Yeah. Doesn't matter. I mean, look, on board U.S., the message, and exactly right, the message from Bessent, as I would summarize it, is U.S. is on board with the IMF, but you guys need to reorg and get your shit together. And that's kind of the message that he gave, which I think is fair. I think it's fair. EJ, thank you, my man. I appreciate it. A lot of emotion here, a lot of headlines and conflicting data, conflicting comments, and rabbit holes. But great working through it with you as always. I will talk to you next week.
My pleasure, as always, Anthony. Until next week.